Hello and welcome to another edition of the China in Africa podcast. I'm Eric Olander, and as always, I'm joined by Cobus Van Staden of Wits University in Johannesburg, South Africa. A very good afternoon to you, Cobus.
Good afternoon.
Cobus, we're going to talk about energy today, and the energy sector in particular in China. And there's a very, very important connection with Africa that we'll get to. But let's talk about energy, and in part because for the Chinese, this is for every major country, and I'd say every country, energy is the lifeblood of their economy. But there's another angle in China which is so critically important. The Chinese economy continues to be one of the fastest growing economies in the world, even though it has slowed dramatically compared to what, say, 10, 15 years ago, from growth rates that were above 10% to now 5 or 6%, depending on who you believe. But nonetheless, the Chinese are consuming vast amounts of energy, and they're having to import a lot of that from the Middle East. It's a lot of carbon-based energy that they're digging out from their own coal mines. The problem, though, for the Chinese is that a lot of this energy is posing two very, very critical problems. Number one is that they are literally choking to death on it. Just last week, the air quality index in Beijing was over 500. Now, to give you some context, here in Ho Chi Minh City, we're oftentimes at about 87, 90, and that's considered the borderline of unhealthy. In San Francisco, unhealthy is somewhere in the range of, the averages are somewhere in the range of 20 to 30. So when you're at 500, you're at a crisis point, and people are literally choking. The other area of energy is very interesting to explore, is that the Chinese import the vast majority of their oil from the Middle East and the Persian Gulf. And a lot of that oil passes through the Straits of Malacca in Southeast Asia. Now, that's an interesting geography there, because that's one of the choke points that if the United States was to get into a conflict with the Chinese, the United States could simply blockade the Straits of Malacca, cutting off the Chinese from a vital energy supply. So what are they doing? The Chinese are moving as fast as possible to renewable energies. So they're basically becoming the leader in solar. They're pushing very hard for electrification of their automobile sector, and they're developing their nuclear sector in a very, very big way. China currently has about 37 nuclear reactors in operation. Really, this is a stunning number. I am the son of a nuclear engineer, so I've grown up around nuclear energy discussions. The Chinese are building 20 more nuclear reactors, so they're really almost doubling their nuclear capacity. And the goal is to raise China's nuclear contribution in the energy market from 2% today to 6% in 2020. Now, that's a 300% growth, which sounds like a lot, but when you compare Chinese nuclear energy as a share of the overall energy market, 2 to 6% is really not that much compared to, say, 20% in the United States and 74% in France. But the one thing that we know is that nuclear energy is going to become a much more important part of their energy mix. And so the key question, Cobus, is where do they get the uranium from?
They get the uranium from Africa, big surprise, and particularly from Niger and from Namibia. At the same time, Africa is also playing an interesting new emerging role as a possible customer for Chinese nuclear reactors. So there's this, over the last few weeks, we've seen several memoranda of understanding signed between African countries and Chinese authorities about exploring the possibilities of importing Chinese-designed, essentially plug-and-play kind of nuclear reactors into various African countries. So the scene is going to develop a lot in the future. It's going to be a very interesting thing to watch. But in terms of purely where the uranium comes from, it comes from Africa, and it comes from very underdeveloped corners of Africa.
And it's one of the areas of natural resource extraction that we don't hear that much about. We talk a lot about timber, gold, oil, copper, iron, all of these other minerals and raw materials, but uranium actually doesn't hit the radar that often. So that's why when we saw a working paper on the China-Africa Research Initiative site, and that's, of course, Carrie at Johns Hopkins University in Washington, D.C., China and uranium, comparative possibilities for agency and statecraft in Niger and Namibia. Don't worry if you didn't understand the title. I didn't either, but we've got one of the authors of the paper, Peter Volberding, and also who wrote it with Jason Warner. I want to give him credit for that. Peter is joining us for the first time on the show. Welcome to the program, and we're really excited to talk about uranium with you today.
Yeah, thank you for having me. I think it's a very important topic. So
It is a very important topic, and it's a topic that I have to be honest with you that I'm not too familiar with. Niger doesn't really pop up. The last time I think Niger really made international headlines was that famous yellow cake, right? That was during the Iraq War, the run-up to the Iraq War. But Niger doesn't really hit the headlines very often. Little known fact, Niger, of course, is the number one producer of uranium in Africa, Namibia being the second. So I presume that's why you chose these two countries to focus on for your very interesting paper. So why don't we start our discussion today, kind of having you just give us the overview of what the Chinese are doing in both Niger and Namibia.
Yeah, of course. So as you talked about, the Chinese demand for nuclear power is exploding. I have in 2030 that they'll have their plans for over 130 nuclear reactors. And China domestic capacity for uranium production simply comes nowhere close to meeting that. And what they've done is two of their companies, one CNNC and the other CGN, has gone out into Africa and made large-scale investments in uranium mines. And today they're ramping up production. The Husab mine is just starting production right now, and is projected to produce almost, or in a few years, about 10,000 tons of uranium per year. So they've invested quite a bit of money. And actually, this Husab mine is the single largest investment that China has made in Africa. Roughly about $2 billion have been spent already in the project. And it looks like they're trying to find other opportunities in both Niger and Namibia.
So in the paper, you mentioned that in Niger's case, their uranium industry has traditionally been very dominated by France. And so, kind of the history and legacy of European colonization in Africa is really clear in Niger. And also kind of French-controlled neo-colonial kind of powers is pretty explicit there. So, kind of what was the hope when the Chinese came in? What kind of, what prospects did they have to wrest a little bit of control away from the French? And then how did the Chinese involvement, how did it end up?
Well, so, yeah, as you mentioned, the Areva had basically 100% monopoly on all of Niger's uranium. And when the Chinese had come in about 2006, 2007 to look at investments, it was really hoped both in government and CSOs, among civil society, that this would really break the monopoly and really give sort of bargaining power to Niger. They could have two companies competing, hopefully increase the price that they receive for uranium, increase the amount of investment, increase the number of jobs. And there was this real hope that, when you get sort of, any market, when you have two bidders, you as the provider will get more benefit from this. Unfortunately, a few years later, this did not happen. It's sort of the classic case of, when people think about Chinese, mineral extraction in Africa, if it could go wrong, it did go wrong. There was widespread environmental damage. There was widespread reports of labor violation at the Chinese mines. And it simply did not materialize in sort of a kind of a large investment sort of way. They were projected to invest about $300 million in this mine called Azalik, but this never materialized, at least in the case of Niger. And that was really a disappointment to both politicians in Niger, civil society, and a lot of people that worked in economic development.
Why do you think Niger didn't live up to the expectations? Was it the Chinese who didn't understand? Was it the Nigerians who weren't? I won't speculate. What were the reasons that you think that it didn't work out in Niger?
Yeah, it's sort of both. CNNC had some domestic experience.
CNNC is who?
Is the China National Nuclear Company Corporation. And that's the largest state-owned nuclear company in China. And they've been traditionally responsible for nuclear power and mining in the Chinese context from about the 1960s. And they had very little experience doing international investments. And this was really their first foray into an international investment in uranium production. And it appears that they were fairly underprepared for the challenges that Niger presented. It's a landlocked country, relatively underdeveloped infrastructure. And there just simply wasn't enough money and planning for that. On the other hand, and this has been brought up a lot, the capacity of the Nigerian government was also not that great. They had a tradition, or supposedly you're supposed to make the mining contracts, for instance, public, but this has never been the case. They also lack sort of the technical capacity to be able to negotiate a deal with the Chinese and to enforce sort of these labor and environmental regulations that they do have on the books legally, but we're unable to enforce when the Chinese came.
And when all of this came to a head, civil society started playing quite a prominent role in the Niger case, right?
Yes. Yeah, the civil society has been fairly active because of Areva, where they had aired their grievances and largely have gotten some concessions for better pay from the French. But this really instigated, because of the hope that China could provide such an opportunity for increased investment, increased jobs, that sort of the disappointment in seeing that, well, actually the outcomes oftentimes were worse than what the French were doing, really galvanized civil society in Niger to start demanding, not really from the Chinese, but from their own government, better conditions, better enforcement of the regulations.
So in your paper, you focused on two countries, Niger and Namibia, and you mentioned that there are vastly different experiences in both countries. So while it didn't work out that well in Niger, the story isn't quite the same in Namibia. Tell us about what happened in Namibia.
Yeah, Namibia is really the shining example of when a Chinese investment can go perfectly well. They bought it off of an Australian company. They paid $1 billion approximately, and they've invested a lot in what's now called the Husab mine to produce something that so far has really pleased the government officials, investors, and civil society and labor organizations in Namibia. And you really see a really successful case of Chinese investment providing jobs for locals, for local businesses, and building up an infrastructure for uranium mining there.
So do you get the idea that in the Namibian case, they learned directly from the Nigerian example, or was it just two different companies with two different corporate structures and two different levels of preparation?
Yeah, I think part of it is Chinese companies are always aware of what their other competitors are doing in Africa, at least, and this one, CGN, comes from Guangdong province, and really was an energy provider. It wasn't a mining company. And this was their also first major investment abroad. And they were very careful to not make the same mistakes. And part of this was because of a different structure. They're not sort of this, they're a much younger, much more market-oriented company. And they really wanted to make a good impression to gain the respect of the Namibians. Part of it is also that Namibia simply has a stronger regulatory framework as well. Their mining ministry and environmental ministry have had a long tradition of regulating and monitoring other nuclear companies or uranium mining companies that come into Namibia. And this, when the Chinese came in, it was sort of just an extension of this process that they had developed. So unfortunately, we only have a very limited case where we have two companies in two different countries, but it's part of both. One, the company was much more involved and aware of the failures of some of the other mining companies, as well as the stronger government aspect of Namibia.
So those two companies, one is the China General Nuclear Power Company, that's CGN, as you were mentioning.
Correct.
They have a 90% share in the Husab mine. The Namibian government has a company called Ipangelo Mining. I hope I'm saying that right. And they have a 10% share. I think it's important for people to understand the importance of this mine. The Husab is the second largest uranium mine in the world. It has a 280 million ton deposit that they believe will take about 20 years to fully mine. So this is a big, big find. We were speaking earlier on a previous show with New York Times reporter Brooke Larmer, and he recently wrote a cover story for the New York Times Magazine where he went to the Husab mine And he talked also with Namibia's finance minister, and there were growing concerns about Namibian sovereignty. Now, not necessarily in the context of the mine, but generally just in the context that the Chinese now have a very, very significant share of one of Namibia's largest exports. And there is concern that the deeper that the Namibians go with the Chinese, potentially it could affect their ability to manage their own sovereignty, or as what you people in the academic world called agency. And that was the title of your paper. Mm-hmm. So let's talk a little bit about that in terms of, are these big multi-billion-dollar investments in a country as small as Namibia jeopardizing Namibia's agency or sovereignty or their own destiny?
Yeah, I think it's a very complicated issue. The 10% stake from Epangelo was actually it was given by the Chinese on the encouragement of domestic actors, and it was sort of Epangelo's lifeline actually to getting a stake in a mine. Namibia traditionally didn't have equity participation, so in this regard, even just a 10% stake really gave some agency or some sovereignty to the Namibians to have a controlling stake, much like what Botswana does in their diamond mines. And right now, in an era of sort of reduced prices, it does help Namibia's finances, because it's reported. Unfortunately, we never got an answer, but it's reported that China right now is actually paying above market prices for uranium production. Now, of course, when Husab comes to full production, and if uranium prices increase and kind of go above what the Chinese have in this long-term contract, then we really could see risks to Namibian sovereignty, because most or all of this uranium is not actually tendered on international markets. It's done through transfer pricing. Basically, the producer, Swakop Uranium, which is the Chinese company in Namibia, will sell the uranium to itself in China. And there's a real worry that, especially if prices kind of rebound, that the Chinese could have a 90% controlling stake over what is a strategic resource in Namibia. So I think this remains to be seen, and it could be partly due to market forces, and as well, how much a lot of this demand in China materializes for nuclear power.
Is the uranium exported in the form of raw ore, or was there any kind of attempt by the Namibians to try and position any form of refining or processing facility in Namibia?
Yeah, so they did get one processing plant. It's the sort of the first stage. It's conversion, but the problem, and we actually have another paper on this, is that uranium is a very, very difficult commodity to have. It's very limited suppliers and buyers. It's highly regulated by the International Atomic Energy Agency, the IAEA, and without sort of being approved by international regulatory bodies, Namibia simply can't move up the value chain. It can't actually do some of the more higher value added production. So while Namibia, it's sort of their long-term strategy, as far as I understand, to be able to process more, currently they don't have the ability or the permission to do so.
Cobus, we've talked a lot about over the past few shows about whether China's losing interest in Africa or is less engaged, and maybe it's buying oil and other resources from other parts of the world because, well, it's got options that it didn't have 10 or 15 years. I think uranium is one of these very interesting categories where it might be very, very actively engaged in Africa for a very, very long time and not subject to the same whims that other resources may be victim to, especially as commodity prices remain very low. So it seems to me, thinking about the strategic, the security, and then the environmental/health concerns that are going on in China, all related to power and energy, that uranium is going to be very, very vital in the China-Africa relationship going forward in the next few years.
I agree, and it's going to be vital in complicated ways. Kind of as we mentioned at the beginning, there's increasing moves towards more and more nuclear power reactors in Africa. As someone who spent a lot of time in Japan, the aftermath, obviously, of the Fukushima nuclear disaster can't be underestimated. Kind of the level of horror and disruption that Fukushima has to always be kind of brought into this conversation, especially in environments like in Africa where governance is frequently an issue. So I think this is going to be a very big, complicated, kind of thorny part of the China-Africa relationship in the future.
Peter, last question for you. Tell us where we're going with this relationship, the Niger, Namibia uranium arrangement with China. Is China going to continue to invest more, or should we see this basically as what they've done and they're not going to do much more in the coming years?
Well, in the case of Niger, it looks like the Chinese haven't revived the project. It's been hasn't produced anything in the past few years. And I think CNNC, the National Nuclear Company or Corporation, was burned by that experience and sort of has no interest in going back. Namibia, however, I think Husab Mine will be one of either the largest or second largest producer of uranium in a very short time. And CNNC, the company that was in Niger, actually has made investments in other Namibian uranium mines. And there's some speculative mines that have happened in Namibia. And I think very soon, if China really goes through with this nuclear power plant program, Africa has a lot of uranium, and it will always be on their radar. They're also looking at other places in Malawi and South Africa, the other two countries in Africa that have at least proven uranium deposits. And I think we will see continuing interest by the Chinese in uranium production as part of their energy diversity initiative.
Peter Volberding is a PhD candidate in the government department at Harvard University. He's also the co-author with Jason Warner, a working paper series at the China-Africa Research Initiative at Johns Hopkins University in Washington. The title of the paper is China and Uranium, Comparative Possibilities for Agency and Statecraft in Niger and Namibia. It's one of these topics that doesn't get a lot of attention. It's a little bit on the wonky academic side, but it's very, very worthwhile reading if you want to kind of dive deeper into China's extraordinarily complex natural resource agreements and partnerships with China. Peter, thank you so much for joining us. We really appreciate your time and hope we can bring you back on the show.
Fantastic. Thank you for having me.
And for Cobus Van Staden, I'm Eric Olander. That'll do it for this edition of the China and Africa podcast. We'll be back again next week with another edition. Thank you so much for listening.
The discussion continues online. Head over to facebook.com/China Africa Project to share your thoughts on today's show, or follow China Africa News that's updated every 4 hours, 24 hours a day, 7 days a week. The guys are also on Twitter, where you can find Cobus at Stadenesque or Eric at Olander. That's EOLANDER. Subscribe to the China Africa podcast on iTunes or download the mobile apps for iOS, Android, or Windows Phone. Just head over to your favorite store and search for China Africa.